Why does trading feel easiest right before it hurts the most? Why is it that the moment you finally feel confident, the market seems to humble you harder than ever? This isn't bad luck. It isn't the market turning against you. It's psychology. And today, I want to talk about the most dangerous phase in trading, the phase that destroys more accounts than fear ever could. Confidence. Not fear, not panic, not doubt. Confidence. Let me explain why. Because if you trade long enough, you'll notice a pattern. You start scared, you hesitate, you overthink, you miss trades. Then slowly, something shifts. You get a few wins, your executions feel smoother, your rules start to click, you feel calm, you feel capable. And everyone tells you this is progress. They say, good, you're becoming confident. But here's the uncomfortable truth. Confidence is not the finish line. Confidence is the most seductive trap in trading, and most traders don't even realize they're walking into it. So let me ask you something. Have you ever had a phase where everything felt easy right before you gave a lot of it back? That wasn't coincidence. That was confidence turning against you. Let's break it down. Point 1. Confidence changes how you perceive risk. When you're new, risk feels loud. Every tick matters. Every candle feels personal. Losses hurt immediately. Wins feel fragile. But confidence does something subtle. It quiets the emotional alarm system. You stop feeling danger the same way. You don't remove risk. You stop respecting it. You start thinking things like, I've seen this before. I know how this plays out. I'll manage it if it goes against me. And that's where perception shifts. Psychology calls this risk normalization. The brain adapts to repeated exposure. What once felt dangerous now feels familiar, and familiar feels safe. But the market doesn't care what feels familiar to you. Your confidence tells you this setup is solid. Your brain adds a quiet assumption, so I can size a little bigger. Not because you planned it, but because it feels justified. And that's the danger. You're not reckless, you're reasonable. That's why confidence is so dangerous. Fear screams, confidence whispers, and whispers are easier to believe. Point 2. Confidence blurs the line between discipline and intuition. Early on, you cling to rules. You need structure. Entry criteria, stop placement, risk limits. Rules protect you because you don't trust yourself yet. But once confidence grows, something else grows with it, self-trust. And self-trust feels powerful. You start saying things like, I don't need to be so rigid. I can feel when something is off. I'll break the rule just this once. And sometimes it works. That's the worst part, because the market occasionally rewards rule breaking, and the brain loves intermittent rewards. It wires confidence directly to flexibility. You start believing your intuition is refined, that you've earned discretion. But psychology has a name for this too. It's called illusion of control. You overestimate how much influence your skill has over random outcomes, and trading has a lot of randomness. Confidence makes you feel like you're reading the market. In reality, you're reading your emotions. You confuse familiarity with mastery. You think, I've seen this pattern so many times. But you forget one thing. Seeing something often doesn't mean you control it. It just means you recognize it. And recognition feels like power. Point 3. Confidence selectively edits memory. This one is subtle and it's deadly. When you're insecure, you remember losses vividly. They sting, they stay. But when you're confident, your memory edits itself. Wins feel earned. Losses feel like exceptions. You start telling yourself stories. I was right, but the execution was off. The setup worked, the timing didn't. That loss doesn't really count. This is called confirmation bias. You search for evidence that supports your self-image as a competent trader, and you downplay anything that threatens it. You don't journal honestly anymore. You journal defensively. You're not asking, what did I do wrong? You're asking, how do I justify this? Confidence protects the ego, and the ego hates being wrong. So instead of correcting behavior, you protect identity. You're no longer focused on process, you're focused on proving you're good. That shift is massive because profitable trading isn't about being right, it's about being aligned with probability. Confidence pulls you towards certainty, markets punish certainty. Point 4. Confidence accelerates overtrading, not because you're greedy, but because you're comfortable. When fear runs the show, you trade less, you wait, you hesitate. Confidence removes friction. You see more setups, you feel ready more often. You're not chasing, you're participating. At least that's how it feels. But here's the truth. Confidence increases activity, and increased activity amplifies mistakes. More trades mean more exposure to variance, more chances for emotion to sneak in. You tell yourself you're being active, but activity isn't productivity. In psychology, there's a concept called action bias. When people feel capable, they prefer doing something over doing nothing, even when doing nothing is the optimal move. Markets reward patience. Confidence rewards action. That's a mismatch. The best traders I've studied don't trade more when they're confident. They trade less because confidence, when mature, doesn't need stimulation. Immature confidence does. It wants to prove itself. Point 5. Confidence delays self-awareness. Fear forces reflection. Confidence postpones it. When things are going well, you don't question yourself. Why would you? You attribute success to skill. You assume growth is linear. But markets are cyclical. Psychology is cyclical. Confidence is a phase, not a destination. And when you mistake a phase for mastery, you stop adapting. You don't review deeply. You don't refine execution. You don't ask uncomfortable questions. You ride momentum until momentum turns. And when it does, the fall feels brutal because now you're not just losing money, you're losing an identity. I thought I had this figured out. That sentence hurts more than any loss. That's why drawdowns after confident phases feel emotionally devastating. It's not about the money, it's about betrayal. Your own mind turned against you. So let's pause for a moment. If you're watching this and thinking, this feels uncomfortably familiar, good. Awareness is the antidote. Confidence isn't bad. Unexamined confidence is. The goal isn't to eliminate confidence, it's to anchor it. Here's how grounded traders handle confidence differently. They treat confidence as a signal, not a permission slip. When confidence rises, they tighten rules, they reduce size, they slow down, because they know confidence is when discipline matters most. They don't trust how good they feel, they trust systems. They understand that the market doesn't reward belief, it rewards consistency. They respect the psychological cycle, fear to learning, confidence to testing, humility to longevity. Most traders get stuck in confidence because it feels like arrival, but trading has no arrival point, only maintenance. So here's the real takeaway. The most dangerous trader isn't the fearful one. Fear can be trained. The most dangerous trader is the confident one who stopped listening, the one who thinks discipline is optional, the one who believes experience makes them immune. It doesn't. Experience just changes how mistakes show up. If you're in a confident phase right now, don't panic. Just get curious. Ask yourself, am I following rules more strictly or less? Am I sizing based on plan or emotion? Am I journaling honestly or selectively? Am I trading because there's an edge or because I feel ready? Those answers tell you everything. Confidence isn't the enemy. Complacency is. And the line between them is thinner than you think. If this video felt like it described you without knowing you, that's not magic. That's psychology. And if you want more breakdowns like this, where we decode the invisible forces behind trading behavior, stay here. Subscribe, watch closely, and remember this. The market doesn't punish fear. It punishes unconscious confidence. Stay aware.